So guys, today we are going to discuss about costing section again. And our main topic is what variable costing for today. Variable costing is also called marginal costing. It's also called direct costing as well. So here we go. We studied last time, like we have a total cost. Okay, total cost of the company can be divided into two areas. We can say the production cost and what non-production cost. Production cost, I told you that these are those costs which you will incur to produce the product, and this cost might include cost of material, which is direct material, cost of labor, which is direct labor, and cost of overheads. I told you last time in overheads we have three things. We have indirect material, which is the part of overhead, indirect labor, and factory operating cost. This thing we have already covered. But ideally, then we have a non-production cost here. Non-production cost, these are those costs which we will obviously incur either to sell the product, which is the selling cost, or maybe to for the administration purpose, like accounts department salaries, these kind of costs, or administration staff salary. So these are non-production. Okay, so now guys, then I told you, because moving to the main point, I told you there is a two words, product cost and period cost. Previously, what I said product cost of those costs which will be the part of what? Cost of goods. So this is also called inventoriable cost. And period cost, I told you these are those costs which will be recorded as an expense below the gross profit or the contribution. It will not be recorded in cost of goods sold. This is what I said previously. So today, from today to onward, we will discuss as per each costing method, which costs will be the part of product and which cost will be the part of period cost. Actually, it depends on the costing method. As I told you, we have two costing methods. So for now, we have one is called what? Variable costing. Variable costing is also called what? Marginal costing. And second costing, what we have here? Absorption costing. Absorption costing is also called full costing. Just remember the words. First, I will tell you a little bit difference between these two costing methods, and then we will go through the variable, which is our major topic today. Please remember, guys, as per, if you remember, I told you here, we have two types of cost. One is called production. One is called what? Like we can include production, and second is what? Non-production. In production, I said three costs, which direct material, direct labor, and what? Variable overheads. Just let me write, and what? Fixed overhead. Because overheads might have variable and fixed portion, right or wrong? So that is why I'm writing here, or you can write this way also. We have here overheads. Overheads has two portions, variable overheads, and which one? Fixed overhead. And direct material, always it is your variable cost. Direct labor is always your variable cost. This is what we assume under costing. Understood? In non-production, what we have, guys? Can you tell me non-production? In non-production, we have a selling cost, selling and marketing, which could be variable or what? Fixed, like commissions is variable, salesman salary is the fixed. And then we have an administration cost. Mostly admin costs are fixed cost. Okay. Now, what is variable costing says? Please, this is the starting point now. The product cost as per variable costing, it should include only variable cost, but from the production. But from the, in simple words, from production cost, we will pick only variable cost. That will be the part of product cost as per variable costing, marginal costing. For example, if you look at it, with three costs are there. Direct material is there, direct labor is there, and variable overheads are there. So these three costs will be the part of product cost under variable costing. And what is remaining now? Tell me what is remaining. Remaining is fixed overhead is remaining from the production, and all non-production is remaining, right? So that is where fixed overhead, all selling costs, either it is variable or fixed, or all administration costs, these costs will be treated as which cost? As period cost. These costs will be recorded as an expense in the income statement. Understood? On the other hand, if you look at here, absorption costing says that the product cost should include all production cost. What? All production. All production includes what? It includes direct material, direct labor, variable overhead, and fixed overhead. So these four will be the part of product cost. And what is remaining now? Only non-manufacturing is remaining. So all non-manufacturing cost will be treated as period cost. Period cost means it will be recorded as expense. So I told you previously, now look what I said. I said previously, product cost will be written under cost of goods sold section, and period cost will be written as under expense section. It means if you are using variable costing, these three costs will be charged to the cost of goods sold. Okay, and if you are using absorption costing, these four costs will be charged to the cost of goods sold. And on the other hand, if you are using variable costing, these three will be charged to the period cost as expense, and the absorption costing, these two will be charged to the period cost as a expense. Understood? If you will tell me what is the difference between these two costing method, what difference you can see here? So I would say difference is only the one thing, that is called what? The blue color here. The difference is fixed overhead from the production. This fixed overhead from the production under variable cost is treated as which cost? Period cost. And but under absorption costing, this is treated as what? As product cost. And this small difference which we can see here, it will make the huge difference over the topics. Understood? So now here we have few other points. This also notes to solve theoretical questions as well. So this side is for variable costing, and this side is for absorption costing. First of all, variable costing we can use only for which reporting? Internal reporting purpose, like just for the management. Okay, second is what? In variable costing, we will see today, profit is measured in terms of contribution margin and what? Net income. What is contribution margin? I will explain, don't worry, with the income statement. And third is what? It is not allowed by IFRS or GAAP. Simply, we cannot use this costing method for external reporting purposes, is what they are trying to say. And then we have, on the other hand, we have absorption costing. Absorption costing can be used for which purpose? Actually, we are using for external reporting purpose. Because when we prepare income statement in our financial accounting, by default, we are following absorption costing there. And then what we have here, under absorption costing, profit is measured in terms of gross profit and what? Net income. Here word is under variable costing, word was what? Contribution. Here word is gross profit. Understood? Clear? And then what? This was not allowed by GAAP or IFRS, but this is allowed by GAAP or IFRS when you produce financial statements, especially income statement. So we follow what? The absorption cost. Clear? So now after this overview, now let me just tell you quickly the things which will be tested from the variable costing and along with theoretical aspects. Number one, variable or marginal costing. The first thing which they can ask you in the question, they will ask you to calculate what? The product cost by using marginal costing. And as I told you, product cost under marginal costing will include only the variable cost from the production. Variable cost from the production only. Understood? Don't include any non-production cost to the, or any fixed cost or non-production cost to the product cost. Now only we will include variable cost, but from the production. So, and I told you variable cost from the production, it will include three things. The first thing, it will include cost of direct material. Second thing is what? Cost of direct labor. Third thing is what? Cost of variable overheads. Okay, how? Because data will be given, just you need to compile from the question, you need to just select from the question and you need to put it into the format. So when you write that direct material cost here, for example, I'm calculating here cost of one unit, any one unit, you can assume maybe chair, table, anything. So for example, first I want to write direct material. How I will write? I will write it here kg per unit. For example, it is chair I'm manufacturing. Each chair requires 10 kg of material. I will write 10 kg. And then I will multiply with what? With the price per kg. For example, I bought this material by paying how much? $5 per kg. It means for each chair, if I'm utilizing 10 kg at a cost of $5 each, it means I need how much? $50 for the direct material cost. Understood? I don't think so there is any rocket science. It's quite simple. Second thing you will add here, which is called which? Direct labor cost. You can simply assume if you are manufacturing chairs, maybe you need a labor person and he will work 5 hours on one chair and you are paying, for example, $15 per hour. So how you will get labor cost now? You will take labor hours per unit, which is how many hours? 5, multiply by rate per hour, which is how much? Let's say $15. So it means you have to pay how much? You have to incur $75 as a labor cost. Then guys, variable overhead. So for just assume variable overhead, because these overheads, how it is charged to the product based on labor hours or machine hours, it's different stories which I will cover with the absorption costing. So here I am assuming for the sake of a simplicity that variable overheads are also allocated based on which hours? Labor hours. Otherwise it can be allocated based on units produced, based on machine hours, based on any other reason also, which have some connection. But here we are assuming, for example, variable overheads are. What is variable overhead? First tell me. Variable overhead means say indirect material, indirect labor. Understood? It might include electricity, which will change with the level of production. That is variable overhead. So those variable overheads can be allocated to the product based on machine hours, or based on labor hours, or based on output. So I'm assuming here it is based on what? Labor hours. Obviously, if labor will work more, so obviously indirect labor cost will increase, they will consume more material, also indirect material. Understood? So I'm just assuming it is connected with the labor hours. So what we will do, if you want to write it here, variable overhead cost, so we will take labor hours per unit, multiply by variable overhead rate per hour. For example, labor hour per unit is how many hours? 15, same like a labor. Understood? And I'm assuming a rate per hour. This is rate for what? Rate for variable overhead. It will be given in the question. But in future, I will tell you how to calculate these rates. Don't worry. I will tell you for variable overhead also, for fixed overhead also. So let's assume we have here, we have a variable overhead rate is how much? $8 per hour for the variable overhead, not for the labor. Variable overhead rate. So once you will multiply, so this will give you what? Variable overhead amount. And I will add all these three values. I'm just assuming total is how much? $165. It could be different also. I'm saying my focus is not on arithmetical accuracy. Okay. So for example, I'm assuming total is how much? 165 is the total of three. Total of three what? Direct material, direct labor, and variable overhead. Understood? And this is called your what? Product cost. And recall with me, product cost is also called inventoriable cost. Which cost? Inventoriable cost. And this cost will be written where? To the cost of goods sold section. That I will show you how. Second thing I already told you, don't forget, because I will use this as a product cost to prepare income statement. Understood? So now question number 2, which they will ask you, maybe he will give you some data, like data for direct material, direct labor, variable overhead, fixed overhead, selling, administration cost. And he will ask you to pick the values for period cost, which are period cost. So guys, here you have to remember period cost will include what? Mainly three. You have to pick what? Fixed overhead from the production. From the production. Then what? All selling cost. All selling is what? Variable and fixed. And what? All admin cost, which is fixed mostly. So these are called what? Period cost. Understood? You have to remember these points in your mind while tackling the question. I will show you some questions. Third question which they will ask you, that is what, how to produce what? Income statement. So first I'm going to show you income statement complete format, because this format can be tested. I mean, so maybe if they will give you question in essay style questions, where you have to prepare income statement by using variable costing. So this will give you help. This is the full-fledged format. And after that, I will tell you shortcut format also. Shortcut format also to solve MCQs. Because sometimes in MCQs, you also need to prepare short income statement. Because maybe he's asking you to calculate what is operating profit or what is contribution. So there you have to prepare short income statement. That I will also tell you. So let's go through first detail wise. This is the income statement by using what? Variable costing, which is called marginal costing. So here we go, guys. Number one, I need your concentration now, please. First of all, this side is for particulars. We will write your information. This is inner column, and this is the final column of dollar. Understood? So first item, we know we will write in the income statement first item, that is what? Sales. And need concentration now. Everything is written there, just you need to understand what I am saying. Sales, how you will record? You will always take units sold times sale price per unit. Because in exam question, it will tell you unit produced, units sold, units unsold, right? Different units it will tell you. So when you write the sales here, make sure you are taking unit sold times what? Sale price of each unit. Understood? Clear? Then we will deduct here. From sales, we will deduct what? Cost of goods sold. And this section is called which section now? This section is called cost of goods sold section, product cost section. Understood? And after this, whatever you will write, that is period cost section. That is period cost. Understood? So here we go. So please focus with me here now. So I want to write cost of goods sold. And cost of goods sold, we know, guys, it is always equal to opening inventory. We are assuming we have a finished goods, okay? We will add there plus, we will plus production cost, and then we will deduct value of ending inventory or closing inventory. This is how we got the cost of goods sold. Opening inventory plus production minus ending inventory. So assume your opening inventory, let's assume it is given, you will write it here. Otherwise, if it is not given, the closing inventory of the last year or the last period will be the opening inventory of this period. Understood? The way which we will use to calculate, the way which we will use to calculate value closing inventory in this period, obviously same way should be used in the, or should have been used in the last period. Right or wrong? Understood? So opening inventory is given. So but here you want to write it plus what? Which cost? Production. I'm highlighting production because we know under variable costing, in production cost, we have only three costs. Which one? Material cost, direct material, direct labor, and variable overhead. So simply how I can calculate? It's written here plus what? Variable production, because under variable costing, marginal costing, variable production cost is the only product cost. Understood? And how you will get the production cost? So you will take what? Unit produced multiply by what? Product cost per unit. And I have just shown you product cost per unit above 165. That I will multiply with which unit? Produced. Understood? This is one way I'm telling you, please. Here, then we will deduct what? Closing inventory value. Closing inventory value, how you will get? Closing inventory, you will take which units first? Unsold unit, and then you will multiply with what? With the, again with the product cost. And product cost includes which three costs? Direct material, direct labor, and variable overhead. But the point is that how you will get unsold unit. So this equation you can use if unsold units are not given. Unsold unit. If it is not given, so how? You will take what? Opening units, the units which you have at the start of the period, plus what? Unit produced. So this is what is called units available for sale and deduct their word unit sold. For example, available for sale is 1,800 units. Out of that, you sold how many units? 1,200. So remaining are what? Unsold units. These are called closing units. So these closing units you will bring it here as unsold units and multiply with the product cost. This will give you what? Value of closing inventory. Here, if anyone will ask you a question, even how to calculate value of closing inventory, even in MCQs, only is asking you to calculate value of closing inventory. You will always take what? Unsold unit and multiply by product cost if you are using variable costing. And product cost include again the summation of direct material, direct labor, and variable overhead. Understood? So once you will take this opening inventory plus production cost minus what? Closing inventory, this is called your cost of goods sold, and this you will take it to the final section and you will deduct. Understood? Now we have taken which value here? Sales. From there you have deducted which value? Cost of goods sold. And in this cost of goods sold, you will agree me only what we have included only? Production cost. So once I will take sale less cost of goods sold, so this is called manufacturing contribution margin. What? Manufacturing contribution margin. Understood? Don't say contribution margin. We will say manufacturing contribution margin. And this section of the variable costing is your product cost section. Cost of goods sold section. Understood? And from manufacturing contribution margin, here it's written in shortcut. Manufacturing contribution margin, how you will calculate? Sales price less what? Production variable cost. Okay, this is the full fledged of the income statement. But in MCQs, he will give you only value of sale, and he will tell you direct material, direct labor, and variable overhead. Assume no opening and closing inventory is available. So then how you will get? You will take sales value less what? Production variable cost. This will also give you manufacturing contribution margin. Understood? Okay, that way I will explain. So then what we have here, you will deduct it less which cost? You have to read the heading. What is the heading? Less non-manufacturing what? But variable cost. What includes non-manufacturing variable like selling cost? You might have salesman commission. Understood? So guys, now please focus with me. So if you have non-manufacturing variable cost like salesman commission, and for example, in person he told you variable selling and marketing cost per unit $2 per unit. Variable selling and marketing cost is $2 per unit, let's assume. So what I will do, I will take that per unit data and I will multiply with which? With unit sold, not produced, because it's a selling cost. I should multiply with the unit sold. Selling cost will incur on unit sold, not on produced. Understood? Clear? So once you will multiply, so you will get here non-manufacturing variable cost, and from the manufacturing contribution margin, once you will deduct this non-manufacturing variable cost also. So this is called now what? This is called contribution margin. Understood? Clear? Can I say this way also? Because other way I'm also telling you. Can I say this way also? Sales value less direct material, direct labor, variable overhead. If I will deduct these three, I'm assuming there is no opening and closing inventory. So this is equal to what? Manufacturing contribution margin. Understood? From there I will subtract what? Variable which cost? Selling and marketing cost. So this is called what? Contribution margin. This is true or wrong? It's true. This thing I can say this way also. Please, you have to remember all that right away. If I will take sales less all variable cost, what? Sales less all variable, like see, material is variable, labor is variable, variable overhead is variable, even selling cost is variable. If I will deduct all variable cost, this directly will give me what? Contribution margin. Understood? Contribution margin is sales less all variable cost. But if I would say no, I want you to calculate manufacturing contribution margin, then what you will do? Sales less only production variable cost. Only production variable cost. That is manufacturing contribution margin. If you will deduct sales minus all variable, including production and non-production, that is called contribution margin. I hope so you're understanding what I'm doing, right? So coming back to the format, so we reached to where we have reached to we reached to the contribution margin, which is equal to sale price less all variable cost. Understood? From there you will deduct what? What word is written here? All fixed cost. All means say what? Even it is production, even it is non-production. All fixed cost we will deduct here. So this will give you what now? Operating income. And guys, now what I told you, from this area, from manufacturing contribution margin to onward, whatever cost you are writing, so these are treated as period cost. Which cost? Period. And this section before manufacturing contribution margin, this is called product cost. Understood? Clear, guys? Can I ask question? Tell me, variable selling cost is the product cost or period cost? Variable selling. It's period. Variable selling is written here in this, it's written down. It's period. Understood? So which are product? Three are product only, you know. Direct material, direct labor, and variable overhead. Apart from that, every cost is period cost. This is shortcut. Understood? Now this is what is the income statement. I hope so you can go through properly. So just this is in case if you are want to revise, I'm showing full-fledged format on your screen now. So this is income statement. You can read one more time by yourself whenever you will watch video, etc. Okay, so this is there now. This is the format. So now, guys, moving forward. This is what I told you. In MCQs, you will follow this format. Because in MCQs, most of the time, he will tell you only which value, sales value, and you will deduct what? This here we are deducting all variable cost. All variable means say what? Direct material, direct labor, variable overhead, variable selling and administration expenses. This is called what? Contribution margin. Then you will deduct all fixed cost, either in production or non-production. This will give you what? Operating income. Now some points which I have to tell you, and then we will go through some couple of examples and questions to see how it is going to work. So some points, some notes are there now, which I want to share with you. Let's do first with small example, starting with a small example. We have company X sells how many units? 20,000 units. In current year, at a sales price of what? 60 per unit. Please make note here. Whenever only one units are available, unit produced are available, or only unit sold are available. So then what we assume? We assume sale is equal to production. Sale is equal to production. Otherwise, he should have tell you unit sold separately and unit produced separately. So here we have a unit sold 20,000. And then we have here what? And what is the sale price? $60 per unit. So X as the following cost. So these are variable costs. You will tell me what are the product costs now. Direct material, product cost, direct labor, product cost, overhead. This overhead is 2. It's a variable overhead. Product cost, selling is product? No. Okay, overhead cost, these are the fixed costs. Selling and administration cost, these are the fixed costs are available. So what I'm going to do, let's produce small income statement by using this data. So how you will do it? So you will write first sales, right? How many units you sold? 20,000 is given in the question first line. And the selling price was $60. It's also given in the first line of the question. Your sale value is 1.2 million. Understood? From there you have to deduct now, because here they are not making difference of product cost and period cost. They are following simple format. Sales less all variable cost and then fixed cost deduct, right? Understood? So here you deducting what? All variable cost. What? All. Simple format. So all variable cost once you will deduct. So we have to take direct material cost. Direct material cost is given here. What is cost per unit? $8. And how many units you have produced or sold? 20,000. So I will multiply 20,000 with 8. So this will give you material cost of 160,000. How you will get labor cost? Again, 20,000 units. Labor cost is how much? $5. It will give you how much? 100,000. How you will get variable overhead cost? Again, 20,000 units times variable overhead cost, which is $2. It will give you 40,000. And then selling cost, 20,000 units multiplied by 1, it will give you 20,000. So once you will take sales less all variable cost, which is 320,000. So 320,000 you will deduct from here. So you will get what? Contribution margin. What it is? Contribution margin. Okay, please here guys, take a note what we assume. This is important. We always assume contribution. Please, what I'm saying, we always assume two things. We assume contribution margin per unit. What? Contribution margin per unit. We assume it remains constant. Not forever, but short period of time. It remains what? Constant. And if you want to calculate contribution margin per unit, it's important. If you will calculate, if you want to calculate contribution margin per unit from here, how you will calculate? You will take sales price. There are two ways to get. Number one is what? Take the sale price, which is $60 less all variable cost per unit. Right? This will give you what? Contribution margin. So how much it is? 13, 15, 16, 60 minus 16, it is 40. 4 is the contribution margin. At sometime you can calculate this way also, contribution margin per unit. Take total contribution, which is 880,000 divided by number of units. So 880,000 is total contribution. Number of units are how much? 20,000. It is how much? 44 point something. Okay, so this is what is your contribution margin. Don't forget the point what I said. What I said, because this point will help you in solving a lot of questions. I said contribution margin per unit remains constant. Understood? Now, we will deduct now fixed cost, because I will just change the data now and I will tell you how it will be implemented. But so far we have to deduct here all fixed cost, all fixed, relevant to production or non-production, which is given here in the question. Fixed costs are given here separately. 350,000, right? Right or wrong? Because these are fixed costs, right? Production and non-production. 350,000 I will deduct here. So this will give you what? Operating income of 530,000. Can I change the question? Can you tell me the exact value? 80,000 divided by 20,000. It is how much? 44. Okay, this is 44 contribution margin per unit. I'm saying that, look, I'm asking you the question now. I'm saying that the same data I'm using, and I want you to do shortcut way, and I'm going to guide you, don't worry. I'm saying that instead of 20,000 units, the company is going to sell 25,000 units. 25,000 units. Tell me what will be the net profit? What will be the operating income? Instead of 20,000, we are going to sell what? 25,000. So what is the net profit? Previously operating income was how much? At 20,000 units, operating income was 530,000. Now you are going to sell how many units? 25,000 units, and I want you to calculate what is operating income. How you will do? I'm telling you shortcut way. Please learn the way. How you will do it? I will calculate quickly contribution per unit. Contribution per unit, which I can do this way also. Sale price per unit minus what? Variable cost, which is how much? $44 contribution per unit. So what I will do now, I will start from here. I will directly start from the contribution minus fixed cost, and I will get revised operating income. What I will do, I will take contribution per unit was how much? 44 multiplied by new number of units sold. How much? 25. It will give you how much? 1.1 million. Okay. Sorry?
1.15
Yeah. So 1.1 million actually, right? Then you will deduct from fixed cost. And what we assume, fixed cost will not change. As per definition, we assume fixed cost is not changing with the level of output. Fixed cost will remain constant, which is how much? 350,000. 350,000. So this will be your new operating income. How much? 750,000. So previously it was what? Previously at 20,000 it was something 530,000. So what is the increase in profit? Increase in profit is what? Previously was 530. Now what? 700 and something. So because previously, guys, look what I'm saying. Previously you were selling 20,000 units. Now you are selling 25,000 units. Previously your operating income was 530,000 and now you got 750,000. Right or wrong? So this is the operating income. Can I change the question? If I will ask you, because how many extra units I'm selling? Extra units I'm selling 5,000. Right or wrong? So if I will ask you what is the increase in operating income by selling extra 5,000 units, so what I will do, I will take the difference of these two values, because this difference is rising due to increase in sales. Right or wrong? So difference will be my answer, which will be how much? 220,000. So this is the increase in operating income by selling how many extra units? By selling 5,000 units. Understood? Clear? It means whenever your sales increase, whenever your units sold will increase, automatically your contribution will increase. Total contribution will increase. Right or wrong? If total per unit contribution remains constant, but total contribution will increase, that is why total your operating income is also increasing. You're understanding what I'm saying? I'm saying two things, guys. First thing I said, contribution per unit remain constant, but when you will sell one extra unit, obviously your total contribution will increase. If your total contribution will increase, your operating income will also increase, because fixed cost is not changing in between operating income and contribution. There is a fixed cost that is not changing. Understood? Clear? So that is why even if your sale will drop or shrink by 1 unit, if your sale is dropping by 1 unit, your total contribution will also decrease by that 1 unit and your profit will also decrease. Understood? These points you have to keep in your mind. And contribution per unit remains constant forever? No, for short term we assume. Okay, that short term could be relevant range. Relevant range I have already explained to you in the last class, right? And these points are written here. So I told you, when you selling when you sell one extra item of the product or service, what will happen? These things will happen. What? Revenue will increase by the sale value of the item sold. Obviously, revenue will increase. Cost will also increase. Which cost? Variable cost will also increase with the sale of that unit. And profit will also increase by the amount of contribution earned from the extra item. And fixed costs do not change, because here if your sales increase, variable cost increase, but contribution profit, which is the difference of sales and variable cost, so that will also increase, but fixed cost do not change. So your overall profit will also increase, and same will happen. What? If you will sell less units, if your sale has decreased, so your sales value will also decrease, your variable cost will also decrease, your contribution will also decrease in total. Understood? I hope it is clear, right? So this is just, you have to read the main idea. As I told you, question will be tested as I have shown you example, in which previously we were selling 20,000 units. Now we are selling 25,000 units. I told you shortcut way to solve it. Directly calculate contribution per unit, multiply with the new unit sold, and then you will get the contribution. Deduct from there what? Fixed cost. You will reach to the operating income. Understood? So this is what you have to do. So these just the same stories are there. This question I have already done because I have increased the production there. So let me do the exam standard question with you now. So we are tackling exam standard question. Guys, I would request you first read this question, please. What is the question here? Let's do the question. They're saying if manufacturing company uses variable costing to cost inventories, I mean, so they're using simply variable costing. Which of the following costs are considered inventoriable cost? Which cost will be inventoriable? Do you remember inventoriable? Direct material, direct labor, and variable overhead. That's it. So number one, only raw material, okay, direct labor, variable manufacturing overhead, and variable selling, not variable selling. This is incorrect. Understood? It's not inventory because inventoriable means a product cost. Product cost, be strict with that. Only raw material and direct labor, no, it should include variable overhead also. This is also not correct option. Only raw material, direct labor, and variable manufacturing overhead cost. Yes, this is true. This is the answer. Only raw material, direct labor, variable, and fixed, not fixed. Fixed will not be the part of inventoriable. Understood? So option C is correct. Variable costing questions are easy because when it will mingle with the absorption costing, then it will become technical. Because there you have to compare two costing methods. So what's going on? Now here we also have here another question. Read the question, please. So which method of inventory, even absorption costing we didn't discuss, but I gave you basic idea like what will be the product, what will be the period cost, right or wrong? Which method of inventory costing treats direct manufacturing cost and manufacturing overhead cost? Direct manufacturing means a direct material plus direct labor and manufacturing overhead cost. He didn't say variable and fixed here, but here next he said both variable and fixed as inventoriable cost. Like it means they are saying direct material, direct labor, variable overhead and fixed overhead. Which costing method will take or will account for all these costs as a product cost? Obviously, it was absorption costing. Understood? Direct costing means a variable costing. Variable costing is also variable costing. Conversion costing is what? Conversion costing will include only cost of labor and labor and overheads. You know conversion cost definition. Okay, that will include only labor and overheads. I told you this definition, when I explained the difference between direct material, direct labor, indirect material, indirect labor. Understood? So absorption costing is the answer. Clear? We have here another question, and this is tricky question. I want to discuss with you. First, I'm giving you time, 2-3 minutes. Read what you understand, and then I will discuss the solution. A corporation pays bonuses to its managers based on operating income. Okay. Obviously, if you will earn more profit for the business, they will give you bonus. As calculated under variable costing, it is now 2 months before the year end. Like there are 2 months to end of the year. And earnings have been depressed for some time. Profits are less. It means there is a chance you will not get the bonus. Which one of the following actions should the production manager definitely implement to maximize the bonus for this year? Simply, if he want to maximize the bonus, he has to maximize the profit. That's it. This is what he want to see. And he is, in short, he's asking question, which action will increase the profit here? Understood? So I'm going to start, and you are using which costing? Variable cost. Understood? Number one, I'm reading from here. Step up production. So the more manufacturing costs are deferred into the inventory. Guys, in variable costing, all production cost is not will not be the part of inventory like fixed cost. It means this action is not going to work with you. Okay, if it is absorption costing, we can think, because all production includes variable cost and fixed cost. They're saying all production cost can be stepped into inventory, because in variable costing, fixed cost will not go to inventory. So this action is not going to work for you. Understood what I said? Should I say again? I'm saying again. But remember your word, more manufacturing costs are deferred into inventory. Manufacturing cost, first understand the word, it includes variable and fixed both. They're saying use those things, do that way that these manufacturing costs should go to inventory. Tell me in variable costing, this fixed cost will go to inventory. Fixed costs don't go to inventory. We treat as a period cost. That is why this action is not going to work, because question is about what? Variable costing. This is not going to work for you. Now look at here, option C. Implement with the aid of the controller activity-based costing and activity-based management. I didn't say anything so far in this lecture. What is activity-based costing? Because activity-based costing is something different. Where if you want to control some cost, you have to control the cost drivers. That I didn't say anything about it. So far skip this option. Then 2.3 million of advertisement and marketing cost. You should cut that 2.3 million of advertisement and marketing. Tell me because what you are the managers of the production, and the 2.3 million of advertisement and marketing cost is not controlled by manager of the production. It is always controlled by whom? By maybe other departments, maybe sales, etc. Not by you. Or in other words, this marketing and selling cost is not your product cost. It is not your product cost. But ideally, why this should not be the part of this? Because this is not under your control actually. You cannot cut this cost. Being a production manager, I cannot cut marketing budget. Understood? That is not my domain. That's why it is not fit here. If you look at it, postpone 1.8 million of discretionary equipment maintenance until next year. Okay, this equipment maintenance is the production cost. Which cost? Production. Repair and maintenance. It is the production cost. It could include some variable portion, some fixed portion. But if you will postpone this cost, obviously the expense will reduce in this period, right? Expense will reduce in this period, so your profit will go up. Or otherwise, if you will go for the maintenance, so expense will be included, profit will go further down. Right or wrong? So you should postpone. That is where this, I would suggest, this is the correct answer. This is not under your control. This I didn't say anything, and this is going to work under absorption cost. Understood? So some questions are tricky, you have to understand. So this explanation is there. B, C, B, D, Y not correct. Okay, even. Understood? So this is the correct answer explanation also. You can go through. Now here we have another question. Please, I want you to read this question carefully. Maybe this question doesn't fit on the screen. So what we have to calculate here? We have to calculate contribution margin earned by Richardson for the prior year was. Contribution margin you have to calculate. Contribution margin. So this is the question is on your screen now. It's a little bit big question. Yes, I can write. True, yeah. So you can start reading here. This is your question on your screen now. Okay, guys, I hope so you read the question. Let me read the question. So they are telling you consider the following information for Richardson company for the prior year. Last information we have. Company produced how many units? 1,000 units and sold how many units? 900 units. Obviously, when they will ask you to calculate profit should always be calculated based on units sold, because that will generate the profit for you. Only unit produced will generate a cost for you. Units sold will generate a profit for you. Okay. Then they're telling you there were no beginning or ending work in process inventory. So there is no inventory, no beginning finished goods inventory. Budgeted and actual fixed costs were equal. All variable manufacturing costs were affected by production volume only, like obviously these are the definition of variable cost. All variable selling costs were affected by the sales volume only. It's the definition for variable selling cost, which will be affected by units sold. Budgeted per unit revenues and cost were as follows. So here we have a given, because simply what I need to calculate first contribution per unit. And from contribution per unit, how I can calculate it? I can take sale price minus all variable cost. Sale price is given how much? 100. Now I need to deduct variable cost. Which variable cost? Direct material is variable, which is 30, I will deduct. Direct labor is also variable, which is 20, I will deduct. Other variable manufacturing cost is 10, which I will also deduct. Fixed selling cost, I will not deduct. Variable selling cost, I will deduct as a $12 because it's a variable cost. Fixed cost, I will not deduct. Fixed administration cost, I will not deduct. That's it. So this will give you contribution per unit. Can you deduct 100 minus 72? It is 28, I guess. Yes. Contribution per unit, right? Contribution per unit is 28. So I will multiply with the units sold. How many units sold? 900. This will give you total contribution. You have to calculate total or per unit? Total you have to calculate. So you will multiply how much? 20? 5,200. So which is correct option? 25, huh? Yeah, 25,200. Understood? Clear? Now we have more questions. Again, take time, read the question and try to solve, and then I will discuss. Let's read the question. OINC plant and actually manufactured how many units? 200,000 units of its single product during its first year of operation. Variable manufacturing. This is variable manufacturing cost were 30 per unit. What it is? Product cost. Variable manufacturing means a direct material, direct labor, and variable overhead. So this is $30. Planned and actual fixed cost are how much? 600,000. This is the fixed cost. Production cost, I guess. Yeah, production. Selling and administration cost total how much? 400,000. This is also fixed cost. Because starting from here it is fixed cost data. Onward. O sold 120,000 units of product at selling price of 40 per unit. So what do you have to calculate? You have to calculate operating income for the year using which costing? Variable costing. So how you will do? I will start from the contribution directly. Because first calculate contribution per unit. Contribution per unit, how you will get? Sale price minus all variable cost. Sale price is given somewhere $40 and variable cost is given 30. So contribution per unit is 10. So this I will multiply with the number of units sold. Multiply with unit sold. This will give me what? Total contribution. Agreed or not? Number of units sold are how much? 100 and right? Yeah. 120,000. If I will multiply with the 10, I will get total contribution. Can you help me? 1.2 million. So this is your contribution. From there you will deduct fixed cost, all fixed cost. And fixed cost you told you here 600,000 here, 400,000 here. Total is 1 million. I will deduct 1 million fixed cost. So this will give you profit of 200,000. Profit of, so see, income statement can also be applied to the MCQ. So this is what is 200,000 is your answer actually. Which is correct option? C. Understood, guys? Clear? Now, guys, I want to tell you when you will open the software. I would request you not to use software this week because questions are mingled. Because topic is 7.4 we have covered. Not completely because in 7.4 we have two topics, variable costing and absorption. We covered only variable. Absorption I will explain in the next class, and this is very important topic from CMA exam point of view. Sometime the essay question, this topic can be tested in essay question as well. I'm telling you, it's very much important. Understood? So next week I will cover absorption costing. We will also compare absorption costing with the variable costing, and we will do profit reconciliation also. So that is why I would request you, please repeat this topic before the next class, then you will easily understand the differences. Okay, guys. So thank you so much. If you have any question, you can ask me.